What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 26. It's July 17th, 2023. We made some trades today, so let's get into it. First thing we need to talk about today, let's talk about our key levels that we have on the chart. So our major key level that we have today is yesterday's closing price. So this is the closing price from Friday, which is 34,695, and that's going to play a very important role in today's session. Now, these zones that I have down below in the pre-market, I drew those from around, I think those started around 7 o'clock, and I extended those across. And then we pretty much broke out of that right before the market opened, and then we never saw those levels again. And all the rest of these zones are zones that I drew based off of consolidation areas as the market continues to move on throughout the day. So first thing first, let's start our analysis at 9:30 this morning. So initially when the market opened, we had a big move to the upside, and then we pretty much gave it all back, came back to retest that bottom of the zone perfectly, almost down to the wick. I think we were one tick away, but that's a really good test, and that shows you that whatever momentum the uptrend had at that point, it still continued to have it despite this strong sell-off that we had coming off of yesterday's closing price. Now, after that happened, we moved back up, created a higher low, and from that point forward, we continue moving. And then once we started getting back into yesterday's closing price once more, that's when I started looking for the long trade. So on trade one, I went long here after seeing a post pattern form, and then my break even stop got hit. So when it comes to a post pattern is a type of pattern that I've recognized in the market that I just named it a post pattern. I'm not sure if other people have discovered this already, but if they have, I don't know what it's called, so I just created my own name. But let's look at our notes to really get a good explanation of it. So this right here is a post pattern. So I'm not gonna read all of it, but I'm gonna give you the short version. So basically, when it comes to a post pattern, it has a two candle setup that you need to look for. First thing first, it has to be a trending day that's clear cut. If you have to ask yourself whether or not it's a trending day, then it's not. It has to be one of those days where it's 100% clear where the market is going and everybody knows which direction it's going. In this scenario, this is from May 5th from this year, 2023. And on this day, we can clearly see that it's clearly an uptrend and there's no debate about it at all. So you want to make sure that that's the first factor that you have when you look for a post pattern. Then next, you want to look at that first candle. So the first candle, it needs to be a large candle like this, where it opens on its lows and really doesn't have any wicks to the downside or any whips on the top of it. Now, in this scenario, it was a very small minimal wick, and that's acceptable, but if it's a candle like this one where the wick is this large on the bottom and the top, it doesn't count. Even though this candle right here did extend for a good amount of price range, this was a 40-point candle, and this is a 1 minute chart, but still you gotta have it where it lines up like candle number one. So if we were gonna look back and try and compare another candle, this candle right here will actually be another perfect example, as well as this candle right here. But the only thing that separates these candles that makes them different is the volume that's associated with it. Not only do you want this candle to be a large candle that doesn't close on its wick, but you also want it to have a larger amount of volume than any of the candles that came before it, because that tells you that momentum has come into the market. And when momentum comes in, typically everybody that was short, they're gonna have to get out of their positions, and in order to cover your short, you have to buy it back. And anybody that looks to trade momentum is gonna go long. So you got two different groups of buyers all getting into the market at the same time, which increases the probabilities of that trade going your way. So that's why you want to see that high momentum on that first tall body candle. So once you have all of those things, that means that, okay, you checked off all those boxes. The trend is definitely clearly defined. The candle has little to no wicks, and it's a large range candle. And then we have higher volume associated with that first body candle. So then we move on to the second candle, which is probably the most important candle, because the formation of the second candle is going to be the determining factor on whether or not you take the trade or if you pass up on it. So let's just read this real quick. So the next variable that we analyze is the candle that follows the tall body. This is what makes or breaks. Okay, let's skip this. So yeah, candle 2, that's a perfect example of what the candle should be. So let's take a look at that. You want to have a very small, like squarish kind of candle like this, where preferably you have a wick on the top where you see that they tried to move up, but they couldn't close up there. Now you don't want this candle to be a large candle. It has to be a small body, because the thing is, you got to remember, this is a continuation pattern. So if you see the move has already completed itself, then it's no more continuation because the move is done. Basically, the way I think about it like this. Look at candles 1 through 5. Now, just instead of these candles all being separated and being 5 separate candles, let's just pretend like we took candle 2, put it on top of candle 1, took candle 3, put it on top of candle 2, and just made this one big candle to the upside instead of 5 different ones. That's how I like to look at it, because basically that's what the market did. It made that move, but it just did it over a longer period of time instead of doing it all on one candle. So if you see that second candle move too far too fast, that tells you that the move is done. It's not really too much more room to run, because you got to remember, people are only taking this trade because they see the momentum. But if they start thinking like me and they say, oh, momentum is already gone too far, if you go long, you might be right, but if it's nobody else that's going long with you, then that trade is probably not going to work. So you always want to make sure that candle 2 is a small body candle that opens above, or either at or above, the closing price from that first tall body candle. It has to have all of those things, and if it doesn't, then it's not a post pattern and you don't take that trade. But if it does, you need to go long immediately on the close of that candle if candle 2 is the perfect second candle formation that you're looking for. So with all of that in mind, let's go back and compare what I saw on trade 1. So look at trade 1. We have that. Let's zoom in a little bit real quick. Hold on. Okay, so on candle 1, we have that tall body candle to the upside that was made on higher volume. Notice how the volume for that tall body candle is significantly higher than all of the candles that came before it within like the last maybe 7 or 8 minutes. So that tells you that once that candle formed, it formed on high momentum. And then you add in the fact that we were moving up towards yesterday's closing price. It makes sense that we're seeing momentum come into the market, because one thing about that closing price from the previous session is that everybody in the market is pretty much aware of that level. Now I trade on a 1-minute chart, and even I'm aware of that level, but it doesn't matter what time frame you trade. You can trade the 5, the 15, the hourly, the 4, or the daily. Everybody is going to be aware of that closing price, because that closing price is going to be the same level for every single trader. So you always going to see some type of reaction and some type of momentum flowing into the market once you start approaching that closing price. Now in today's session, we actually saw that momentum coming in to the upside, where people wanted to continue to buy after prices past that closing price. So that's what I was looking at when I saw that first body candle. So I'm like, okay, cool. Now the second body, it wasn't necessarily the perfect second body that I was looking for. It was a little bit too tall for me. I would have preferred if, instead of it closing like, let's call this 93, because yesterday's closing price is 95, so this should be around 93. Let's say it closed a couple of points lower. Maybe it closed right here at the bottom level of the zone. If that was the case, that would have been a perfect second body candle, and you could have went long and held that trade, not only to a scalp target, but until you saw a red candle, you can hold that trade. So once I saw that second body close, I was like, you know what? It's not perfect, but it's good enough. And I see that the trend is clearly defined. It's clearly going to the upside. So I said, okay, you know what? I'll take that trade. And let's go back to my notes. Let's read that real quick. Now, my break even stop eventually got hit. Now, I was up about maybe 15 points, but I decided, you know what? If it's a post pattern, you got to let that trade run. Either it's going to hit your profit target, or it's going to keep going and give you multiple profit targets. But today was just not the case. And looking back on it, even though today was a trending day where the trend was clearly defined as up, it was more of a slow trending day where, yeah, prices are going to go up all day, but they're gonna consolidate for a while and then break out, consolidate for a while and then break out. And after I took this screenshot, it continued doing that for the rest of the day too. Consolidate, break out, consolidate, break out, and just kept moving higher and higher and higher. But today it just wasn't the ideal scenario to take that post pattern, because remember what I said, post pattern is a continuation pattern. So you can only take continuation patterns on trending days where it's clearly defined. So I think maybe I need to go back and look at more post patterns and get a better idea of what clearly trending means, because it's different levels to it, different levels to what trending means, and you got to be able to distinguish between each one of those, because that's very important. So ultimately, trade one just came back to break even, but eventually we ended up creating a higher low down here. I drew up my zone, boxed it up, and then used that as a reference point. But see, on trade two, I made a mistake again. I made the mistake of going long at higher prices, which is something that you really should not do when you're not in a trending type of market. And because we were more so consolidating at this point, that wasn't the right decision for me to make. And look at what the note says. It says, I went long here, expecting the bull spike to continue. Buy low no matter what. So even on those days where you feel like, man, this is a continuation pattern, I need to get in, because if I don't, the market is going to move without me. If it moves without you, oh well. Take the prices from the best levels that you can get, and don't settle for anything else, because it's nobody in the market that's forcing you to take these trades. You have complete authority about where you want to get in, how long you want to hold it, and how much you want to buy. It's your choice, so you got to make the right decisions. And that's one of the biggest things I learned from trade two, is that, look, man, you got to be aware of what type of day it is, because look at what happened if I would have done what I was supposed to do when I traded zone, which is buy from the edge of the zone, which is, if I'm going to go long, I'm going long from the bottom, and that's it. If I would have went long from the bottom, I would have caught it right here, been able to take it back up to the top, make good profit. So that's just a lesson right there that I learned on trade two. So after trade two, we created a double bottom down here, followed by a higher low right here, which broke us out of the zone and eventually pushed us up to where trade three was located. Now on trade three, let's read our notes. So I went long after seeing a post pattern, but looking back on it, I misread the second candle formation. So remember how I was telling you guys that the second candle has to be that candle that's a very small, like squarish type of body. Look at candle two right here. This is what your second candle formation needs to look like. If it doesn't look like that, just pass up on the trade. Even though sometimes it might be tempting, like on a day like today, you would think, oh, okay, I see what the trend is doing. We had a consolidation. Now we broke out and we about to start a spike to the upside. And that's not necessarily the case, because anytime you break out, you have a tendency to kind of come back and retest the zone. Now, there will be some occasions on a continuation type of day where you just keep pushing and keep pushing, but today was not that type of scenario. And me taking trade three was pretty much the same mistake that I made from trade two, just going long at higher prices. So I gotta work on that. Like, it's something in me that makes me feel as though I'm gonna miss out on the move if I don't get in right now. But if I would just place my orders at lower prices, usually the market will come back there, tag my level, and give me a good profitable trade. So instead of me going long up here at trade number three, it would have been better to either go long at the top of the zone, expecting the breakout to be successful, or to go long at yesterday's closing price, seeing as though it's only maybe 15 points below the top of the zone. It would make sense for prices to come back and retest that level first, and then continue moving higher to the upside. So whenever you have that closing price down below, it definitely makes a big difference, and it acts as a magnet. So if you want to go long and you see that closing price, put your order down below. You don't have to go long at the highest price. And then on trades 4 and 5, this was just me trading the zone the wrong way. Now on trade 4, I went short at the top of the zone. And you would say, oh, okay, well, that makes sense. That's a good move, going short from the top of the zone or going long from the bottom. But for me, I like to eliminate one of those sides. And the way I do that is I determine which way prices were moving before the consolidation got established. Since prices were moving up today, that means that I only want to trade the consolidation from the long side. Even though you could trade from the short side and short it as it gets to the top, eventually, more than likely, it's going to break out in the direction that it was trending before the consolidation got established. So eventually you're going to get burned trying to short the top of that consolidation zone. So even though I took trade 4 and it could have been profitable, it stopped at break even, so I didn't take a loss on it. But even though I didn't take a loss on it, that's still not the best trade, because you don't want to fight the trend no matter what the price pattern or chart scenario you might be looking at. No matter what it tells you, you do not want to fight the trend no matter what the scenario is. So that was trade 4. But then on trade 5, I just made a mistake right here. I went long because I'm thinking that, oh, okay, basically I went long right here because we established a higher low after we made that double bottom a little bit earlier. So I'm like, okay, if we extend a level of support across that higher low, then eventually we would come in where trade 5 was entered at, and we should be moving higher and continuing to have the uptrend make higher pushes. But the only thing was, the zone was the zone, and no matter what price patterns you see, you got to respect the zone. So if anything, maybe I should have went lower. I should have went long at yesterday's closing price, which was at a lower price than what I got in at. And that's pretty much the theme for today. That's the biggest theme, which is buy low, sell high. That's the reason I titled this video that, because if I would have bought low on all of my trades today, I would have made crazy money. I would have been very, very well off. But, I made some mistakes and I got to clean those up. But buy low and sell high, just pretty much at this point, I'm going to make that a non-negotiable. Now, my continuation patterns, they do work. And I have to get into those continuation patterns by buying at higher prices. But because I'm trying to get out of drawdown, it's certain price patterns and chart patterns that I choose not to trade. And that's going to be one of those ones that I have to say, look, I love my bull spikes. I love my bear spikes. I love my post patterns, but I'm going to have to hold off on all of those until I'm out of drawdown and my confidence is back on level 100. Right now, I'm focusing on my bread and butter setup. So the setups that I know are just going to get me profit and get me back out of drawdown. So those are my higher low setups, my zone setups, my trend line setups. Those are the ones that I want to focus on. So that's a big lesson for me going forward into the future. Focus on my bread and butter and don't try and take every setup that I know until I get my confidence all the way back. So after trade 5, we came back, retested yesterday's closing price one last time. We broke out of the zone, and then we finally had that successful retest of the zone right here, and that continued up, and that brought us to trade number 6. So let's read those notes. I went long at low prices during the uptrend, and then prices came back to my break even stop, which pretty much sucks because, as we can see, the move definitely did end up going to my profit target. But sometimes that's just how it goes. You have a good entry, but you come back, you get stopped out at break even. You got to roll with the punches, man. You got to accept that and just wait for the next best opportunity. But when you don't accept that loss and you try and chase behind the market, you end up making mistakes like I did on trade number 7. Because this right here was a pure revenge trade. I'm like, look, trade 6, I got in right there, and then the move happened. Well, if it's a trending day to the upside, we probably just going to continue moving up from right here, right? No, we're going to pull back and make a consolidation, come back to a level of support, and then eventually move up, which is usually how markets work like 90% of the time. So that was on me right there for making that decision at trade 7. That wasn't necessarily the best decision for me to make. And I think this right here is really important from the notes. It says, I have to fight the urge to buy at higher prices. And that's something that I got to continuously keep on the front of my brain, which is whatever happens, whatever the scenario might be, Ty, do not go long at higher prices in an uptrend. And then again, on the flip side, in a downtrend, don't short it from the lowest prices either. You got to fight that urge. And it's tough because you feel as though, oh, okay, here comes the move. It's coming right now. Let me go ahead and get in so I don't miss it. But like I said before, it's going to be sometimes where you just miss a move and you got to get over it and just accept it and then look for the next best opportunity. So That's the biggest takeaway I got from trade 7. You gotta fight that urge, no matter how tough it might be. You gotta be strong in your discipline as a trader. You have to, or else you're gonna take losses like I did. Nobody wants to do that. So let's move on to trade 8. So let's read the notes. I went long here expecting for the uptrend to continue, but I wasn't sure about the trade, so I cut it early. And I think that's a good decision, because if you're not quite sure about how a trade is going to play out, you shouldn't stick around to just see what happens. You should get out and then say, okay, let me see what the market does. And if it gives me what I was looking for, I can just get back in, and there's nothing to it. So on trade 8, good decision right there. But trade 9, and I'm not gonna say it's a completely bad decision, because let's zoom in and actually really break this down. Let's read the notes first, actually. So I made the same mistake from, no, that's trade 7. I'm tripping. Trade 9. Okay, I went short here as soon as prices closed below support. Some strategies only work on certain days, because in terms of the actual trade that I took based on the price action, that trade made perfect sense, because we established a swing high, came back to create a lower high right here, right above trade 8, and then we broke down below a level of support from the higher low that we formed a little bit earlier in the market. So on any other type of day, that would usually lead to a good move to the downside, either probably to come back and test the top of the zone, or to come back and test yesterday's closing price. But you also have to consider the overall market environment that you're trading in, because today was a clearly defined uptrend where we consolidate, breakout, consolidate, breakout. You don't want to necessarily take that first short trade on the break of the consolidation area, because more than likely that's going to turn out to be a false breakout, and that's just a level where everybody who's looking to go long is like, oh wow, I can buy it at lower prices right here, let me scoop some up. And basically that's what happened at trade 9, because we see that huge surge in momentum to the upside come right back in as soon as we broke down below that level of support. So that's what I mean when I say that you can see a false breakout from there. So you got to remember to keep the overall market picture in mind. Whenever you're in a day like this where the trend is clearly defined as up, you got to hesitate when you think about taking any short trade and say, you know what, I could take this short trade, I really could, but I'm gonna just be patient, and I'm gonna wait for the buyers to step back in and give me a higher low, and then I'll think about going long. You only want to trade the trend from the direction that it's in until it's clearly defined that the trend has rolled over, and that was not the case at this time at all. So on trade 9, that's what I learned right there. Just on a trending day, ignore the other side. Only entertain the side that the market is trending in, and that's that. So that moves us on to trade number 10. So let's zoom back out. Let's see, where are the notes? Okay, so I went long right here, but just like the mistakes I made from earlier, I bought way too high, because I don't have it boxed up, but we could pretty much draw a consolidation zone right here, where this support level right here would be the bottom, and pretty much this swing high would be the top. So let's draw it right here and draw it across, and just imagine that that's the zone right there. If I'm going long at trade 10, I'm going long towards the top of the zone, the same way that I did on trade number 5, and the same way that I did on trade number 2. None of those setups work today, and I think that's a clearly defined lesson right there that tells you that if you're buying at the top of the zone, you just really setting yourself up for failure, because more than likely prices are coming back to test the bottom of the zone. And look at what would have happened if I would have went long at the bottom of the zone like I was supposed to. I would have been able to catch the long trade at trade 11 and then take it back up to the top of the zone, or I could have just held it for the rest of the day if I wanted to, because I knew that it was a trending day, so more than likely prices will continue up until 4 o'clock when the market closes. But on trade 11, let's talk about that. I actually went short right here. Let's read the notes. Don't short a zone from the bottom. Don't look for shorts during the first pullback of an uptrend. So when you're in an uptrend like this and you get that pullback and it looks like prices might finally be breaking to the downside, don't trust it. More than likely, it's just prices coming back to a level where buyers are going to scoop it all up and continue to push prices higher, the same way that we saw it happen on trade number 9. And actually, for me to take the short trade at number 9 and then take the short trade at trade 11, that's not a good decision either, because If you saw that a trade didn't work from a level earlier in the market, you don't want to try and test that level again, because more than likely, if it didn't work before, it's not going to work this time either. I think it's human nature sometimes to say, well, if it didn't work last time, it should work this time. No, 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 no. Don't try and be all logical and try and outsmart the market. If it didn't work the first time, then it's not going to work the second time. That's just what it is. You don't have to try and be Mr. Genius over here. So at 11, just going short right there, that's just not a good decision. One, because you're shorting at the lows of a zone, and two, because you're shorting in a very strong uptrend. So like you can see, I definitely got stopped out on that trade. And that actually brought us to trade number 12, where I saw prices come down and retest a support level from a higher low right here that got established. So I'm like, okay, clearly the trend is up. Let me get in. I saw prices come back to the higher low. The only thing I can do right here is go long. So that's what I did. But let's read the notes. So I went long at low prices during the uptrend. Check mark. Good job. But I was too scared to take a loss, so I cut the trade before it could work out. Bad job. And if I would have held that trade, it would have came back up, hit my profit target, and continued moving higher for the rest of the day. But the thing was, I had took so many bad trades up until that point that I was so scared that I was like, man, nah, I'm not sure. I don't know. And that's what I mean when I say the decisions that you make in the past definitely will affect how you move in the future. I think I talked about this on the trade review from Friday, where I said those small details and those small decisions that you make really are the biggest and most important ones, because those are going to affect your mentality down the line. Now, maybe you might know it's a good trade, like I did on trade 12. I knew that was a good entry, but my mentality was shaky because I was scared, because I didn't want to take losses and add on to what I was already dealing with throughout that day. So I'm like, I don't know. So that's what I mean when I say you got to make the right decision through and through, no matter what it is, big or small. It has to be the right decision. So that was my last trade for the day. I was out of rhythm with the market, and I said, okay, I've taken enough losses. Let me just cut it back, cut bait, jump ship, and come back tomorrow when I have a better mentality and I can look at the market from a more logical perspective. So that was the end of it for me. And overall today, man, I would say I definitely dropped the ball a little bit, but I would say the silver lining in the clouds is that all of the decisions that I made and all of the lessons that I learned today, none of those lessons were new lessons. All of these lessons were things that I have already learned in the past, that I have knowledge on, that I'm already aware of. So that gives me a little bit of optimism, because I'm like, look, I have the knowledge. I know what I'm supposed to be doing. But the only thing is, it's not enough to just have the knowledge. You got to have the knowledge, and then you got to come into the market every day and apply that knowledge in the proper and correct ways so you can make profitable trades. And that's what I'm working on getting back to. So tonight in my back testing session, I'm going to get on the simulator and I'm going to focus on trading the trend from the best possible prices. And if I don't get those prices, I'm just going to practice watching the trend move on without me. And I'm also going to practice not taking revenge trades when I see the market move on without me. And I'm also going to practice, the last thing is to wait for the next best opportunity after a trade either works out or it doesn't. Don't try and revenge trade and get right back in. Be patient, stick to your rules, and stick to your plan. So that's my main focus for tonight. And I think if I do all of those things right in my back testing session tonight, it should be no reason that I shouldn't come back tomorrow and knock it out the park. So I appreciate you guys for tuning in with me. I learned a lot today, and I hope you guys did too. I'll see you back here tomorrow on July 18th, Tuesday. But until then, you guys, take it easy.